This week's number, 70. A Florida man crossing the Atlantic Ocean in a buoyant hamster wheel made it 70 miles off the coast of Georgia before the U.S. Coast Guard intercepted him. True story, hamsters were my favorite first pets. They live 5 days and don't require any food or water. Welcome to Prof G Markets. Today, we're discussing Google's antitrust case, Birkenstock's IPO, and surge pricing at the pub. Have not felt that. Here with the news is Prof G media analyst and alcoholic in training. I don't know if that's true. I actually haven't drank that much with you, Ed. Ed Elson. Ed, what is going on?
We should do that. I'm well. Are you back in London?
Surge pricing. Isn't that what you pay for Viagra? I just made that up. That's pretty good. I'm back in the UK, Ed. I'm back in the UK.
When did you get back?
I got back from Atlanta, where I was with Chick-fil-A. Super nice people. And I came back for the IMG offsite at Soho Farmhouse, where a bunch of people in linear TV were still in consensual hallucination that they can grow those assets. God, Jesus Christ.
Did you tell them that?
Yeah, I said this linear television is, and here's the thing, they can still be great assets. You can still make a lot of money, but stop treating it like a teenager and pumping it full of Botox and lying to your employees and investors that you're going to somehow stop the bleeding. If it's linear, it's in decline. The bright spot, though, and that was one of the things that was so interesting about this gathering, is sports. Linear for sports is a feature, not a bug. For everything else, it's a bug, right? I don't want to have to watch the Brady Bunch at 8 p.m. on a Friday night, and I get distracted listening to Up and Away in my beautiful balloon by the Fifth Dimension with my father, and it's 8:35, and I freak out and start crying for hours because I realize I've missed the Brady Bunch. Anyways, childhood trauma, Ed. But you have, for sports, linear is a feature. My kids they'll watch highlights, but they're not going to DVR the Arsenal game and then watch it later. It's either live or it's Memorex, so to speak. They'll endure the ads. But distinct to that, there was guys from Comcast and Disney, and they were all talking about their linear stuff. And yeah, cable cording's faster than we thought, but we still expect growth. And they talked about all their small victories. And it's like, Jesus, are you guys just lying to everybody, or do you actually believe this shit?
What do they say when you tell them that? Dead.
There's no way these guys are going to stick around and listen to me, or they all took off in their helicopter, went back to their jets. My guess is enjoy the helicopter, because pretty soon someone from TikTok's going to be in that helicopter. But anyways, it just strikes me that they really haven't. I would just take a different tack and say, yeah, these businesses are declining, but they can still be very profitable. And I don't know if they believe this or it's just kind of a big IR wrap. I was looking at all the different companies. Disney's off. Disney's at a 10-year low. Viacom's down 75%. The one that's done okay is actually Comcast, because it has cable. And also they're in Philadelphia. And if you figure out a way to be a billionaire in Philadelphia, it means you've killed some people. I would not fuck with Comcast. Anyways, I don't know how I got here. Take us to the headlines, Ed.
Let's do it. Let's start with our weekly review of market vitals. The S&P 500 rose, the dollar was stable, and Bitcoin gained slightly. The consumer price index showed inflation rose 3.7% in August. That's higher than July's reading of 3.2%. And that data will inform the Federal Reserve's next interest rate decision this week. Arm went public at $51 per share, as we previewed last week, valuing the company at $54.5 billion. Within the first 30 minutes of trading, though, shares popped more than 20% to above $61 per share. Tesla stock rose 10% in its largest single-day increase since January. The rally came after a Morgan Stanley analyst wrote that revenue from the company's Dojo supercomputer could add $500 billion in value. That revenue would take Tesla above a $1 trillion valuation. Apple unveiled 4 new iPhone models and 2 new watches. The new phones are now compatible with a USB-C charging port instead of the old Lightning port. That's to comply with new EU regulation that requires all smartphones to have USB-C ports by the end of 2024. The market's reaction was lackluster, with shares falling 2%. And finally, the United Auto Workers launched a limited strike against Ford, GM, and Stellantis. The union is strategically targeting individual factories on a case-by-case basis rather than staging a full-blown walkout, but it plans to expand the strike if negotiations continue to stall. Scott, any thoughts on those headlines?
First off, can you give us just the headline news on what the Dojo supercomputer is?
It's a supercomputer that they're
Well,
using
thanks for that. We're off to a good start. Go ahead, Ed.
Oh, come on.
Named
God, shut me
Dojo.
down.
You've clearly done some work. Can we get some more blinding insight from you? Go ahead.
It's
Sorry, go
basically
ahead.
like it's an AI. I mean, what's another word for a supercomputer? It's a very good computer that they're using for.
Super even?
Okay, it's a very good, very powerful computer, and the point is that it has more processing power, supposedly enough to train all of the AI models that you need for full self-driving. And I think the reason people are excited about it, the potential is that they could leverage all of that processing power and service other AI companies. And essentially, Tesla would become the pick and shovel for anyone who's working on full self-driving.
All I've read is that it added the value of BMW in one day because of this supercomputer that has something to do with AI or autonomous driving. I guess it can train artificial intelligence models for self-driving cars, and they're spending $1 billion on it. What shocks me is it just got such an incredible bump. I guess I think it'll open an addressable market. It's got to be beyond vehicles. And what is
Well,
it here?
yeah,
It
I
says
mean, I think the idea is that you can, I mean, it's sort of like an NVIDIA play that you can license that out,
mhm.
and that operating ability to other companies. I think people think that it's going to be eventually a potential SaaS play.
I just think it's amazing. I guess it will help any computer that help a computer process anything with a visual field. So you can imagine all sorts of new AI for, the Ring camera, right? That it could immediately recognize friend or foe, or it could know what level of security to, it sounds like it'd just be amazing for TSA or anything that has a visual field. I guess it offers new levels of decision making, right? But the market's reaction here is just staggering.
Yeah.
I mean, added the value of BMW in one day. It's just crazy. The other auto guys have got to be saying, well, Jesus Christ, maybe we should start building tech products and announcing them. This is really, it's interesting. People have described Tesla as a mediocre car with great software, and they describe the rest of the auto industry as great cars with mediocre software. And it just strikes me that you'd much rather be better at software than being a car maker. Anyways,
Well,
I,
yeah, I
I
mean, you
read
look at
this and was
the
blown away.
PE multiples, Ford's at 6x, BMW's 4x, Volkswagen 5x, and then Tesla's at 77x. It's like
77 times
77
revenues?
times, no, earnings. I think it's 10x sales.
Yeah, that absolutely blows my mind. So inflation, my understanding is that most of that bump in inflation was because gas prices increased about 11%.
Yep.
And things like motor vehicle insurance, car repairs all remain pretty inflated. On a brighter note, rents increased 7.8% in August from a year earlier, but down from a peak of 8.8% earlier this year, and the slowest rate of increase since last fall. Going on TikTok, I don't know if you've had this experience, but whenever I go on TikTok, it's basically a lesson in, according to all of TikTok, housing prices are going to just, and rents are just going to keep going up no matter what.
Those are the only
Uh,
texts I get from you these days.
that's
I
it.
think I've gotten
It's
maybe
all, yeah, about
like
housing
10 like
prices.
links to TikToks talking about
Well,
housing prices.
I'm just freaked out about your generation. That if you look at the price of houses relative to incomes, basically home ownership has become a pipe dream for young people. I saw one stat that just absolutely blew my mind. In 1980, the average age of a home buyer was 29, and now it's 47. And it used to be nobody paid cash, and now like 1 in 3 buyers are paying all cash. Basically, home ownership has become the playground of my generation, and Gen Z and millennials have been pretty much sequestered from any hope of owning a home. It just absolutely, anyways, freaks me out. But ARM's IPO, I was shocked here. I didn't think it was going to get the kind of valuation it got. I thought that they would try and price it aggressively to try and to talk themselves into believing it was worth what it was in the private markets. But a great pop. We did predict earlier in the year that the IPO market was going to have fresh life, and I think is this the largest IPO of the year? It's got to be
Yep.
now.
Yep.
If they can raise this kind of capital and still have, I guess it was 12 times oversubscribed, That's a very positive forward-looking indicator. Dojo we talked about a little bit last month, and Tesla's up 150% this year. Jesus, that's just nuts. The UAW auto strike. I think they will go on strike, and I think it will get settled. And there's a difference if you look at sort of the three big strikes. The Teamsters and UPS got settled because the Teamsters had leverage.
Hmm.
UPS is doing well, and there is no UPS if the drivers go on strike. And also, I think this strike gets settled. Their requests are fairly straightforward. We want more money. The auto industry, including even the domestic automakers, are making money, and they were asking for 46% pay raises over 4 years. Ford offered 20%. So, let's call it they end up with probably high 20s, low 30s. And it still makes sense that this still works. These companies will still be profitable. Ford, GM, they all have decent EV offerings, and they continue to make the most profitable automobiles in the world. And that's other than luxury automobiles, and that is trucks. And also, it's difficult for the CEOs to kind of say no here because someone pointed out that at these three companies, compensation has gone up on average 40%. So it's going to be difficult for them to push back and say, no, we're not going to give you more than, 20. And they've already offered them 20. And that's a decent pay bump. So I think this thing gets solved. Where in contrast, and this is a lesson in negotiation, you have the writers strike. One, they had no leverage. If the Teamsters at UPS and if the UAW at the automobile manufacturers go on strike, consumers feel it immediately at the new car lot or their packages don't show up. Would you know? Would you, Ed Elson, who's a consumer of media and who every advertiser and every cable company and every streamer wants, you're a key consumer because you're going into your mating years, which means you'll spend money on stupid high margin things, so advertisers love you. Would you know? Would
Going
you
into my
know?
mating years. That's good.
There you go. Just
Not
slowly
there
but
yet.
surely, in a very awkward
Just gonna
way,
dip
kind of
my toes
melting
in, yeah.
in, mating into the easing into the mating years. But would you know if you didn't know that there was a writer strike? Has that had any impact on the quality or volume of your content consumption?
No, absolutely none. I mean, yeah, I've agreed with you on this from the very beginning. I mean, we'll
Yeah.
see if there's going to be some downstream effects, maybe like 6, 7, 8 months. But I mean, I'm with you. I don't consume new series that much. I spend most of my media time is spent on Instagram or TikTok, and then when I'm watching Netflix, I'm watching you know old movies. I'm watching like Glenn Ross right now. Like, yeah, I'm not consuming new content.
I just feel as if our content cues are the depth of the Mariana Trench. So, and I don't think that many people miss Jimmy Kimmel or Colbert. I don't think
Yeah.
they care. And what's interesting about the writer strike is it's beginning to crack. I don't know if you saw this, but both Drew Barrymore and Bill Maher have said they're returning, and they're going
Oh
to
wow.
return with they're basically busting or crossing the picket line. And I think it's the first of many. I think it's the beginning of the end of the strike, and I think the writers' union is just going to come out of this
Yeah.
deeply scarred as people realize that the people running the union have their heads up their ass and decided to strike when they had no leverage and make demands that the studios were never going to meet, and they just totally underestimated. They just read the chessboard terribly here.
Hmm.
What else were we talking about? What
Apple
else is here?
Apple has a
Apple.
new iPhone.
Yeah, yawn.
Yeah.
All I heard was they've got a different charging port, and I'll get one because that's how I roll, Ed. That's how I roll. But I don't. I'm least excited about this upgrade as I have been about any iPhone upgrade. It strikes me as really uninspiring here.
Yeah.
And it's interesting. Apple's sales of iPhones have either been flat or declined for a while, but they've done an amazing job moving to services, and obviously they still have a monopoly on the app side of the market, but and everyone's saying, "Oh no, the end of big tech because it went down 7%." Jesus Christ, the stock has tripled in the last 5 years. What'll be more interesting is I read an interesting stat. 20% or about 1/5 of their revenue comes from China, but 4/5 of their products come from China, are manufactured in China. So the sort of non-hot war or the non-shooting war that is the trade war that's emerging, Apple is right in the center of that, and it'll be interesting that I mean, so far the Chinese have responded by telling government officials they can't use the iPhone, which isn't that big a deal. What would really hurt both Apple and China is if they decided to, put additional restrictions on them manufacturing there, their supply chain there. So
Yeah,
that's
combined
going to
with
be
the fact
interesting.
that all their chips are TSMC chips, which is in Taiwan. So
It's a
that's
small
just
world, isn't
yeah.
it? It's a small world.
But here's another crazy stat. I mean, so you look at the phone, it's the only change is it's slightly lighter, it's got a different charging port, slightly better camera, slightly faster. But Apple spent $30 billion on R&D spending last year, which is 7% of their total revenues. And if you look at their R&D spend before they launched the iPhone, it was around 2% of revenue. So the question is like, what are they doing? I mean, I think the answer is they're working on that headset. Do you think that the time and the resources that they're spending on this headset, which is likely taking up all those $30 billion of R&D spending, do you think that's detracting from the long-term quality of the iPhone?
I don't. My understanding is I think they only spent about $1 billion on the headset. And
So
going back,
29 billion on the iPhone. Where on earth is the rest of the R&D going to?
well, I don't, maybe I have my numbers wrong, but my guess is they spend a ton of money across all types of products. And I mean, but let's back up. The interesting thing about Apple's expenditure, what is Apple's total revenue? Is it like 300 billion or something like that?
400.
Okay, so 30 billion of 400, what is that? That's about 8%.
Yeah.
Is that right? So, look, what's interesting is if you look at the tech titans of yesteryear, including IBM and Microsoft in the 90s or whatever, as a percentage of the revenue, I believe, were in kind of the low teens or the low double digits. And what that says is to me is it's great to be a monopoly, and that is you don't need to make the same sort of forward-leaning investments in R&D. And I would bet as the market has consolidated, you have seen slowly but surely a decline in R&D as registered by a percentage of your top line revenues. And which leads me to I think, into our next big story, which is searching for a breakup. Ed, lead
Hmm.
us in.
That was pretty good. Last week marked the beginning of the most significant antitrust trial in 25 years. The monopolist in question is Google. The US et al. V. Google case alleges that Google has been engaging in anti competitive behavior for years. The lawsuit hinges on one practice in particular. Since 2010, Google has paid companies such as Apple to make their search engine the default option on mobile phones and computers. Per the prosecutors, these deals cost Google more than $10 billion every year. And they argue that without these agreements, Google would not have been able to maintain its 90% share of the internet search market. Mia spoke with Josef Weitzman, who was in Washington covering this case for the Substack Big Tech on Trial. He says Google's main defense so far is simply that no company has made a competitive enough product.
I think like in a lot of ways, like that's the core of Google's defense. Like people use us because we're the best. If we weren't the best, like they could easily switch. And I think that, they've said, if you want to switch your default search engine, like all it takes is a few clicks. So that's 100% an argument Google is making. The government's response to that is, it's kind of, there's multiple aspects to it. One aspect is like, if that's the case, like if people really use Google just because it's the best, like why are you paying billions of dollars to Apple to be the default search engine?
For that full interview, check out our YouTube channel, The Prof G Show. So, Scott, you've been calling for stronger antitrust enforcement for years. It was the main message of your book, The Four. Is this the kind of enforcement you had in mind?
So either it's, I guess, a bench case where the judge, who's very well respected, gets to make this decision. It's on a jury,
Yep.
or we need new laws. And America has a proud legacy of antitrust. And let's go through each of them or all of the stakeholders kind of one by one. First, there's shareholders. And if you look at the majority of breakups, whether it's self-imposed, eBay spinning PayPal, or AT&T being broken up into, I think it was either 7 or 9 baby bells, shareholders almost always win in a breakup. Because why? Because the markets and investors love pure plays. And that is, should Google be in the business of autonomous? Should eBay be in the business of payments? Should Amazon be in the business of advertising or cloud? And the thing is, if Amazon spun AWS, not now because Amazon stock has recovered from its lows, but I've been arguing for a long time that AWS, an independent AWS, would be the most valuable company in the world because cloud is the most exciting technology. I think it's even more exciting than AI. I think AI might be folded into, or AI features and functionality be folded into cloud offerings. But that would be the stock that everyone has in their 401k or everyone gives to little Rachel on her bat mitzvah because it's just who wouldn't want to own AWS? And when you have these conglomerates, what happens is investors are confused by them, have a difficult time sussing out the growth of YouTube versus Google Cloud, and they find the shittiest business or the least amazing business, and they assign that multiple to everything. So typically breakups are accretive for shareholders. Shareholders win. Each of the 7 baby bells was worth more than the original AT&T within like 10 years. So shareholders win. 2, employees of the company. They win because you have more companies vying or competing to rent their labor, more employers. Let's talk about the VC community. It wins because it's got more companies to fund. The corporations outside of those conglomerates or those monopolies win. Why? Because if there were 2 search engines, which there would be if you broke up, say you split, if you forced one of the remedies was to force Alphabet to spin YouTube. Within 6 months, the good folks at YouTube and independent YouTube decide to start text-based search. Within 6 months of the spin of YouTube, an independent Google says we should start our own video-based search. And overnight, you have 2 competitors in each category. And what does that mean? It means in order to grab back market share, they each start lowering the prices, and the tax that is search and video search on corporate America goes down. In addition, more companies fill in different niches, and the VC community thrives. There's more tax revenue because there's more companies and typically more innovation and more profits. What did we find in Bell Labs? AT&T said, if you break us up, we're not going to have Bell Labs. They're right. They closed down Bell Labs. And what do you know? Within Bell Labs, where these technologies that never saw the light of day because AT&T didn't want to cannibalize their long distance business, which they had 80 or 90% share. And we got fiber optics, and we got analytics, and we got cell phone technology. So it unlocks innovation and the ecosystem wins. Let's talk about the Commonwealth. The Commonwealth wins because YouTube stops radicalizing young men, and Meta stops sending emails suggesting suicidal ideation and images of nooses, pills, and razors. That actually happened here in the UK because P&G doesn't have to advertise with them because they're not a monopoly and decides to advertise with the video search platform that's figured out a way not to radicalize young men, or decides that they're not going to advertise on Instagram because they have more options and they're going to go with video-based or image-based or photo sharing-based platforms that have put in place the safeguards, which are expensive, that don't in fact help girls harm themselves. So what do we have? Society wins, the Commonwealth wins, the tax base wins, employees win, shareholders win, the venture capital community wins. The only loser in these breakups are unfortunately the people in charge, and that is the founders who have dual-class shareholder structures who want to sit on the Iron Throne of all 7 realms, not just Westeros. And Sergey and Larry, who control Alphabet, would rather control a bigger kingdom, even if it means they're only going to be worth 80 billion each, not 100 or 120. And it's the same with Zuckerberg, but effectively what you have is the only stakeholder that loses is unfortunately the one in charge. So they massively spend on lobbyists. It's not so disappointing that our elected officials are whores. I've always known that. Most people know that. It's that they're such cheap whores. And that is, you literally can weaponize them with not that much money. So I'm excited again. I'm back on the antitrust meth. I think I've had my heart broken here, Ed. I've had my heart broken. But I think that I'm really hoping that Lena Khan and Cantor, Jonathan Cantor, I think that's his name, Jonathan Cantor, and I hope Judge Amit Mehta fines for the DOJ and decides to break up Google.
You look at YouTube, it's generating $29 billion in revenue every year. Compare that to existing media groups like New York Times, it makes $2 billion. Fox makes $14 billion. It actually makes more than PayPal every year, which brings in $27 billion in revenue.
YouTube, right? What does YouTube
That's
make?
YouTube, $29 billion,
Yeah,
10% of revenues.
YouTube is bigger than NVIDIA.
Yeah.
Isn't that crazy?
So agreed on all those points. The thing is, you look at this case, and it's not about breaking up Google. It's about the fact that Google pays Apple $10 billion a year. So,
yeah.
I mean, do you really think that, the solution to this problem, it seems like isn't going to be, okay, let's go in and break up Google and break up big tech. The solution is, okay, let's tell Google you're not allowed to pay Apple $10 billion a year now. And if they did that, would that really change much?
Here's the thing about antitrust. It's often not the remedy that changes behavior, it's the scrutiny. And what do we mean by that? If the DOJ finds in favor of Google, what they'll effectively be saying, regardless if the remedy is just they have to stop these massive payments to other platforms to be the default search engine, it will say to the marketplace and to other judges that there's precedent here that we think this company is engaging in monopoly abuse. And it clears the way, I believe, for other guilty verdicts and other remedies. And it also sends a message to Google that they've got to stop this predatory monopoly-like behavior. When Microsoft was found guilty of antitrust or monopoly abuse and there was a judgment to break them up, it was eventually overturned. And so the question is, well, okay, then it didn't have any effect. Actually, it did, because they had to sign a consent decree. And part of that consent decree was how they treated new companies and startups, that they weren't as predatory around performing infanticide on startups. And guess what happened? Because of that consent decree, a little search engine got out of the crib named Google. So it's just so kind of cynical and ironic that a company birthed by antitrust, Google, is in the midst of this trial right now. And that is, Google would not exist had we not had a proud legacy and script around antitrust that resulted in a consent decree against Microsoft. If we didn't have antitrust, if we hadn't had the DOJ go after Microsoft, if they hadn't been forced to sign a consent decree, we'd all be saying, I don't know, bing it.
Do you believe that $10 billion payment is monopoly abuse?
I think if you are the only one who has the capital to make your product the default, and as a result, you get more and more data and pull away such that no other company can compete with you, I think that is monopoly abuse, monopoly power, and results in a less healthy ecosystem. And I think we have to look at this not through the lens of these are bad people and they've done anything wrong or as punishment, but through the lens of this is recognition that you're so successful and have become so powerful that you're this giant oak sucking up all the water and nutrients for the forest around you, and nothing else can get out of the ground.
The scale is what makes Google a good product. And I'm down with the argument that, okay, well, why are you paying $10 billion a year to be the default search engine? My bet would be, okay, tell them to stop doing that. I don't think that the search market is going to change much. I think people are going to say, yeah, I'm going to opt with Google because it's the best product out there.
I would argue that there's a lot of evidence that when Google is both the market maker and has the best software or the most dominant software for placing ads and the most dominant software for buying ads, you're either the advertiser or you're the business,
Yeah.
and they have the best software on both sides, or I should say the most dominant software. And then in the middle, in terms of pairing the trades, like a stock market, matching them for a certain price, they also own that, and they're very opaque as to how that pricing mechanism is controlled. Now,
Yeah.
let's assume that the price comes is actually because it's makes sense to have that kind of scale, that it makes sense. So similar to the power plants in Florida, Florida Power and Light says justifiably, we don't need two coal-fired power plants. We don't need two grids. We need one. And they control 90% plus of power generation. There's a term for that. It's called a utility. And when you have a utility and it makes sense to have a natural monopoly, you have regulators because people realize with 90% share, there are externalities. There are too many opportunities for abuse. Now let's talk about another example of prices. Amazon, which I also believe is a monopoly and should be broken up, their largest business is their marketplace, where a retailer sits on top of Amazon, and Amazon does not take title to the products. They just put Joey's lawn care, and then Joey, if he wants to sell more on Amazon, has to pay them for shipping, advertise with Amazon Media Group, and he used to have to pay 19% of sales. But because Amazon was a great deal and invested and had really low pricing, some would say predatory pricing, they rolled up the market. They have at least 50% share. Some say 70% if you take out gas and food, et cetera, of online commerce. And now, what do you know? The monopoly, now that they've consolidated the market, it's now 34%. So I think there's a lot of evidence, and I think economists will show that prices have gone up. But in addition, there's non-economic prices. Ed, what is the price to parents when their kids are there's only one platform in social? What is the price that people pay because these firms don't have to behave well. There's so much bad behavior that emerges from companies that own 90+%. And if in fact you are right, and there's a benefit to that type of scale, that's called a utility. And we should have government officials in there looking at transparently at how they price their products, what decisions they make to ensure the protection of the Commonwealth, what guardrails they put in place around election misinformation, around trafficking, all that sort of shit.
I'll just end on this. I mean,
Yeah.
agreed what you're saying about these guys
No,
are
you
extreme.
don't, bitch. You're
Well,
just saying that because I
but-
signed the front of your check.
But I think there needs to be specifically a legalistic framework from which to attack this about, are they abusing, are they conducting monopoly abuse? And to me, it's not good enough to say they're mean and they're too big. And I think that you look at the cases that they've brought against them, and it's sort of evidence that for the past 5 years or so, we've been too obsessed with saying, look how big they are, without pointing out if there's actually any monopoly abuse going on versus it just being an extremely good business. And the fact that the best thing that they've come up with is you pay $10 billion to these companies, which is more than twice less what people had predicted, is evidence to me that, these are sort of weak monopoly abuse claims.
We're saying that the Commonwealth, parents, investors, employees, and the parent, we're saying that pretty much everybody in American society and in the West would be better off, make more money, have more money in the retirement account, be less worried about their children. Startups would have a better chance of succeeding. There'd be more return on investment to venture capitalists. There'd be a broader tax base if instead of having 3 or 4 of these companies, we had 11 or 12 to compete against each other. Generally speaking, competition results in wonderful things.
Let's move on to our second story. German shoemaker Birkenstock filed for IPO last week. The company will list on the New York Stock Exchange under the ticker BIRK, and it's estimated that the company will garner a valuation of more than $7 billion. Birkenstock is majority owned by private equity firm L. Catterton, which is LVMH's investment arm, and it valued the company back in 2021 at roughly $5 billion. This is the second IPO for L. Catterton's portfolio in just a few months. The firm is also an investor in beauty company Oddity Tech, which went public back in July and which Scott and I covered on our July 24th episode. Scott, here's another consumer IPO. Can we officially say the IPO market is back to life?
I think so.
Yeah.
Year on year, IPOs are up. I would have bet not against the ARM IPO, but I didn't think it was going to get the pop it got.
Yeah.
Birkenstock's going to get a pop. I believe it'll be up somewhere between 20 and 40% on the first trade. It's just, or maybe even more. It's a global brand. It's got the product. It just continues to resonate. And this is Pulse Marketing. But where I live in Soho, there's a Birkenstock store, and on a regular basis on weekends,
On the block.
there's a 10 or 20-minute line
Yeah, it's crazy.
to get into Birkenstock. I think these guys have done such an outstanding job of keeping their brand and their product relevant. It has an incredible direct-to-consumer business, which means they don't have to pay monopoly prices from Google, from your buddy, from your little hoe, your little side piece called Google.
My boy.
38% of sales. It's grown. And direct-to-consumer sales, get this, in the last 4 years have grown at an average, a CAGR of 42%. And that 7 years ago, Birkenstock publicly quit Amazon, which I love, which the dog loves, in the U.S. due to counterfeit and unauthorized sales on its site. And why does Amazon continue to have counterfeits and unauthorized sales? Because they can, Ed. Why? Because see above their fucking monopoly. Consumer loyalty. The average U.S. consumer, get this, the average U.S. consumer owns 3.6 pairs of Birkenstocks. It has an NPS of 55, meaning people just freaking love the product. Their revenues increased 29% year on year to $1.3 billion in 2022. They have 29% operating margins. Those things, what a shocker, don't cost a ton to make. 15% net income margin. And it's a global business. About half their revenues from the Americas, about a third from Europe, 10% from APAC. And they're fantastic. Now, granted, they're guilty of some of what I would call yoga babble. By the way, I'm credited in the Urban Dictionary with the term yoga babble, Ed. I don't know if you know that.
I did.
They write, following open quote, we see ourselves as the oldest startup on earth. We are, I think that's called the Catholic Church. And by the way, you want to talk about monopoly power such that they can get away with doing really horrible things, Ed? See above the Catholic Church. And it says, okay, let me continue. We are serving a primal need of all human beings. We are a
Yikes.
footbed company selling the experience of walking as intended by nature. I'll sell
Dude.
you. The functional nature of and growing usage occasions for Birkenstock products enable the universality of our brand, allowing us to serve every human regardless of geography, gender, age, and income. I don't think that's true, Birkenstock. I don't think anyone can afford your shoes. That shit, that like granola, like hippie thing is it's kind of expensive. I wonder what the average price point is on their shoe. Anyways, I think I think it's just, I think this thing is gonna be a huge story because
Hmm.
I think it's gonna I think first trade this thing's up dramatically, and I think to your original question, I think the IPO market is beginning to thaw.
Hmm. So short term, you think it works, but one question that I had is about moats, and that is, you know, for a fashion or an apparel company like this, which specializes in a really unique product, which is this sort of granola crunchy hippie shoe, the only real moat that you have is the brand. And I think about comparable companies that recently IPO'd, and the best one I can think of is Allbirds, which
Hmm.
IPO'd back in November 2021, and it's performed terribly. It's down 40% year to date. Since the IPO, it's down 94%. And the reality is the earnings didn't live up to the hype. It had $100 million in annual losses, sales are declining, and then the CEO on the earnings call is, you know, in so many words, basically said people don't really fuck with our brand that much right now. So I feel like Birkenstock is in kind of a similar position, right? I mean, it's having this hot moment. The line is around the block, but how do you think about that from an investor perspective? And how should a company like Birkenstock be protecting themselves from that kind of fallout? Should they be maybe diversifying their revenue streams or just, you know, focusing all their attention on enhancing the brand? How would you think about it if you were an operator at Birkenstock?
I think comparing Birkenstock to Allbirds is like comparing Tom Petty to Milli Vanilli. I just don't think there's any comparison.
Okay.
Birkenstock has been part of the zeitgeist in American culture and progressive, for lack of a better term, boho chic or hippie culture for 20 or 30 years.
Hmm.
People love the product. It's been around forever. It's iconic. They do a good job with their stores. The company has a nice culture. They eat their own cooking. They basically stuck up the middle finger. They were one of the few that took on a monopoly, and I don't want to say one. People have tremendous affection for this brand. I would bet their supply chain is really strong.
Hmm.
Their stores are really nice. I just don't think there's any comparison. This is people who it's a unique blend of sort of hip hippie, and that is what I mean is fashion as it's associated with that type of movement or that type of demographic using it usually isn't the type of fashion that wealthy people aspire to, right?
Hmm.
Like tie-dye just isn't in that vogue very long, or bell-bottom jeans. This product has universal appeal across a bunch of demographics. It's a great product. It's a truly global brand. I would bet that Birkenstock has name or brand recognition across 50 to 80% of the West. It is truly a global brand. It's a well-run company, and it's not like Allbirds where it kind of shot up.
Hmm.
This is a company that's increased revenues. It's just a well-run business, tightly
Yeah.
run business, great operating margins, great net income, diversification of revenues. For God's sakes, fucking Allbirds, Ed. Jesus Christ, what are you smoking? What bad edibles did you get on Google from some Joey Bag of Donuts edible dealer who's overpaying for his search words? No, there's no comparison between these two companies. Anyways, I don't, I'm not. I own a couple of pairs of Birkenstock. My
Hmm.
Everyone in my family wears Birkenstocks. It's just this is. I have a difficult time, other than maybe Nike, thinking of a footwear company, maybe Adidas, that is this iconic, that owns the category. Actually, Birkenstock, whatever that category is called, is more dominant in its category. Open air sandals or whatever they want to call it is more dominant than Nike. So because Nike has several pretty formidable competitors, I think I'm taking the over
How?
under on this one.
Okay.
This
Will
is
you will
this
you
is
buy
going to be
shares?
big.
That's the
I'd
real
love to
question.
buy shares. I
Okay.
don't know if I'll be able to get in. I would love if I could get the CEO or someone at El Catterton to give me allocation in the IPO. I would take this all day long, and I would not only that, I would hold this stock for 3 to 5 years. This is a
Oh wow.
company. I think this company, when I look at the fact that they're not selling that much in Asia, I think it has all sorts of international growth opportunities. And when I see the line around the block in Soho, it says to me that there's opportunity to own more stores. So I am very
All right. Whoever's
bullish on
underwriting
Birkenstock.
this, Prof G wants in.
That's right.
The
Call
final.
it. Call
Yeah.
me. And by the way, El Catterton, Jesus Christ, as if LVMH didn't need more wins. El Catterton
Yeah.
is killing it. First
Yeah.
Oddity, and now this. My gosh. Give those people, give L, whoever L is, a raise. I think it's L from LVMH, but
That's
boy, are
right.
they doing a great job.
Yeah. L
Good for
Capital
them.
was the
El
old.
Catterton
Yeah.
Capital, yeah.
Yeah. That's right. Let's move on to our third story. The largest pub chain in Britain is adopting a controversial new business strategy: surge pricing. At 800 of Stonegate Group's 4,000 pubs, a pint of beer will now cost a different amount depending on when you come in. In the middle of the weekday, the price remains the same, but on weekends and evenings, it's about 20 pence more. This change has angered UK consumers who are already dealing with higher beer prices due to inflation. In 2019, the average pint in the UK cost £3.70. Today, that number is £4.58, a 24% increase. At the same time, the pub industry is struggling. In the past 2 decades, the number of pubs in the UK has fallen by a quarter, and COVID only made things worse. So, Scott, we've gotten used to surge pricing in other industries like air travel, hotels, ride sharing. But do you think surge pricing makes sense for pubs?
100%. There's surge pricing at Denny's. I go to Denny's before 5 p.m. because, I'm old, to get the Grand Slam special for $2.99. Actually, none of that is true. But surge pricing, of course. Time-based pricing, call it surge pricing. I think of it as time-based pricing, right?
Yeah.
If I fly on a Saturday versus a Friday or a Sunday, it's an entirely different price on an airline. If I go to the early show at movies, I remember going to the movies in the early afternoon because it was $3 instead of $5. So I don't see why this would be any different. And I think people who are more cost conscious, who want to, my gym has, I'm a member of Equinox, mostly because the people there are very hot. The people there are very hot. Anyways, but they have surge pricing, and that is they have, I think, memberships where you can only come in certain hours. Gyms have been doing, everybody does this. So I think this makes a lot of sense. And the pub industry in the UK is really interesting because there's certain real estate that is zoned just for pubs. They take pubs very seriously here.
Mhm.
And you can buy a pub and think, wow, I'll pay £500,000 for this pub because just the real estate's worth more. And it's like, no, it's not, because it has to be a
Gotta be a
pub.
pub.
I go to Guy Ritchie's pub. It's called Lore of the Land, and they do an amazing job for brunch. Like they basically slaughter a lamb, and then just they do such a good job, and it's
Sounds
so
like a pretty
authentic and so
fancy pub.
British. And you play darts.
Okay.
By the way, I met the guy that owns the biggest darts league. Who would have thought that thing would work? That works.
Oh,
You know
wow.
the darts league and the darts championships, they like sell out Madison Square
Yeah,
Garden.
they're
Anyways,
epic. We should go.
yeah. Have you been?
No, but I've talked about it with my mates a bunch of times. We'd all love to go. Maybe I
Really?
can go with you. Oh,
Well,
yeah.
that guy. Well, I had dinner with him last night. He's a handsome guy. He has dark hair. He looks way too young. Looks way too young to own a sports league. If he's listening to this, bring us to darts, and we'll live blog it or whatever it is we do to become influencers. But they have giant screens, and then they have mics on the dartboard, so you hear the, and then the
Oh,
whole
yeah, it's
crowd goes
epic.
crazy.
It's epic.
And
And
strikes me
piss
as
drunk
like,
the whole
oh
the
my
whole thing.
God,
It's
it's
awesome.
like it strikes me as the world's largest AA meeting. But anyways, where are we? The pubs,
Yeah.
the pubs in the UK are a big part of pub culture. And I think surge pricing, I think it makes all the sense in the world. It's everywhere. And if you don't like it, and personally, I like it because I'm finally at the place in my life do you remember when you, me, and who was it? We went and had a beer in the UK. Who did we go out with?
It was just you and me, right? At the pub?
Was it just you and me? That's true, because I
Yeah, it was
like you
just you
more
and
than
me.
the other employees. That's right. But remember, we couldn't find a seat. I'm like,
Yeah,
I'm at a stage
yeah.
in my life where, Jesus Christ, double the price and get all of these people out of here. And I know how elitist that sounds.
Mhm.
But when I was younger, I wanted to drink in off hours and get cheaper beer. So there's something for everybody here.
Yeah.
I don't I think this makes
What
all
about
the
the
sense in the
fact that
world.
it's just from a consumer perspective deeply unpopular? So just as an example, AMC tried this, and
Hmm.
then in July they abandoned it because people were just so upset about it. And then Lyft obviously has surge pricing, but they're considering getting rid of it. And the CEO said, quote, riders hate it with a fiery passion. And the point being,
Hmm.
they're just losing out on potential rides because people are so angry. Do you think it's possible that, the psychological effects of just saying we have surge pricing could be, more damaging to the business versus operating with the less efficient, non-dynamic, non-time-based business model that you're advocating for?
Yeah, but the majority of new pricing schematics or new products fail, and then the company, if it doesn't work, then the pubs will move away from it. I'm
Okay.
going to go out on a limb here and assume that we shouldn't take business cues from Lyft, uh, other than other than it sucks to be the distant number two. So it's funny that AMC's not doing. I know AMC did that movie pass thing that made no sense, but I thought at least when I was growing up, surge pricing was a big deal. I remember my dad and me and my sister and his third wife was it number three or number four? Linda, were you number three or number four? We don't know. Anyways, we used to go to some bad mall on like a Wednesday night, and it was $2 instead of $5.
Yeah.
And I think that it makes sense. I think I think price discrimination works really well for a variety of people
Yeah.
on both ends. So
Yeah.
I don't,
Yeah. Just
I'm down with it.
some interesting research. I was reading this research paper out of UPenn, which investigated surge pricing specifically for the ride sharing industry. And they basically found that when you account for the amount of time saved for the rider, combined with the fact that the surge pricing allows you to set lower price points on average, there's an overall increase in welfare of 3.5% for the rider. So, in some, it can benefit the consumer. But, I was reading that and thinking, okay, that's great. But also, ride sharing is a very different industry because it's so supply and demand sensitive. Like, there's time sensitivity, and the supply and demand can vary so dramatically depending on the time. Do you think that you can apply those same principles for, say, flights, ride sharing, hotels, where demand can become constrained so drastically at any given time, and apply it to something like the pub industry?
I don't see why not. I don't see
Yeah.
why people would think, okay, if we wait till 7 p.m., we work a little bit longer, or we decide to kick off a little bit earlier, we get different pricing. One of the things I was most disappointed in, or really frustrated, was that Michael Bloomberg wanted to do surge pricing or peak hour pricing for cars in the city, and that is he wanted to charge them a tax if they were driving their cars around during rush hour. To me, that just made a lot of sense. One, we
Yeah.
need to price emissions more to their externalities, and two, it just made it was so difficult to get around town during rush hour. And you think, well, okay, that's just because you're an elitist, Scott, and you have the money. But my sense is if you reinvest some of that in infrastructure such that you can better fund the subways, better fund buses, and encourage people to take public transportation, and not only that, the people who aren't taking public transportation and are driving a carbon spewing vehicle during rush hour should just pay a lot more. I really like surge pricing. I think it makes sense, and
Do you think it should
it's not.
apply to everything? Do you think everything should be priced dynamically?
Um, it's really interesting. I don't. I mean, you realize that every company we're talking about, there's variable pricing. I mean,
Right. Right.
Google,
Yeah.
go on Amazon. And if you log in from different IP addresses at different times, and you'll get different pricing. So this happens everywhere. Look at the ticket industry. So I think that figuring out how to get, if I mean, if you book a hotel 30 days in advance, you get a lower price. And if it's the variable pricing and yield dynamics, God, the airline industry, think about how variable the pricing is there. They manage to fill every plane. And I believe the lowest to the highest price or the lowest to the greatest price, there's like 700 or 800% difference. And if I type in, where am I going next? I'm going to the Bay Area. Your prices will change based on when you're searching and all kinds of stuff. So And if it doesn't work, they'll adapt and they'll get rid of it. And if consumers throw up on it and don't like it, they'll stop it. This is capitalism at work, except if they're a monopoly and they abuse that power, Ed.
So, Scott, before we wrap up, let's listen to a prediction that you made exactly 1 year ago about TikTok.
My prediction is that in the next 90 days, we either see a dramatic change in ownership, meaning a very large investor. And when I say a change in ownership, I mean a change in ownership to an American entity, or we see an outright acquisition. I think something that would solve all problems for TikTok would be if Microsoft acquired it. And there's so much money on the line here, and the heat is getting ratcheted up so quickly that I think the shareholders at ByteDance are going to say, okay, we're willing to cash in and make someone else a larger shareholder here in exchange for creating some distinction between the CCP and an unbelievable product. Because this company is probably worth $500 billion to $1 trillion right now. If that doesn't happen, in my view, that reflects that the CCP is already having influence on this company and not letting them pursue a sale. And I think you're going to see regulation. Did you bring that clip up because you're mad at me because I'm right about monopoly abuse? Is that what you're trying to do here? You're trying to undermine my credibility?
Claire. Get angry at Claire.
Yeah. So I'm still holding up to that prediction. I just think I got the timing wrong. I would argue that I'm kind of half pregnant here or half right. And that is the federal government has banned the use of TikTok from all employees of all federal agencies. Mm-hmm. That is the beginning of a ban. I mean, that's okay. Maybe we don't have time to pass the law, but we are. I mean, the federal government is the largest employer in the nation, and so the largest employer in the nation has banned all of its employees from using any ByteDance product. So this has been banned.
All right, let's take a look at the week ahead. We'll see the latest interest rate decision from Fed Chair Jerome Powell. Economists are anticipating that the Fed will pause rate hikes this month, but another hike this year is still on the table. Scott, do you have any predictions for us?
Birkenstock. Birkenstock is not all birds. This thing's gonna get a pretty big pop here, Ed.
Okay.
You and you're gonna take me out for a pub during surge pricing when this thing pops. I'm gonna say I should look at the valuation first. It's gonna get a serious pop. Thank you for watching this version of Prof G Markets. Check out our pod feed for office hours on Wednesday, and we'll be back with a fresh take on markets every Monday.